Today we are examining a new Iraqi Dinar exchange rate claim circulating on the 23rd of August 2026, involving two specific figures, $3,202 and $3,037 per Iraqi Dinar. The claim describes 3.22 as a calibrated floor or settlement level and 3.37 as a projected open market float ceiling after a possible launch into unrestricted foreign exchange markets. According to the commentary, the difference between these two figures would represent a controlled corridor rather than a contradiction. Now, before we go any further, it is important to separate an analytical claim from an officially confirmed exchange rate decision. The figures mentioned in this report should not be treated as an announced rate from the Central Bank of Iraq, nor should they be interpreted as a guaranteed future value of the Iraqi dinar. At this time, the most important question is not whether a specific number sounds attractive, but whether there is official evidence showing that Iraq has actually changed its exchange rate regime, announced a new official rate, or introduced a freely floating dinar in international markets. The idea behind the 3.22 to 3.37 corridor is nevertheless interesting from an economic perspective. In a conventional foreign exchange market, currencies can trade within ranges because buyers and sellers continuously adjust prices according to supply, demand, liquidity, expectations, interest rate conditions, trade flows, and central bank policy. A difference between an official or settlement rate and a market rate can therefore exist under certain monetary arrangements. But that does not automatically mean that every projected corridor is real, or that a particular numerical range has been approved. The first number in the claim is $322. The commentary describes this as a calibrated floor or settlement level. In practical terms, such language suggests a reference point around which transactions could theoretically begin under a new exchange rate framework. However, investors and currency observers should understand that the existence of a theoretical settlement level does not prove that the Iraqi authorities have selected that number. The second figure is $3.37, which is described as a projected open market ceiling. The argument is that if the dinar eventually entered a more flexible market environment, demand and supply could allow its market price to move above a starting reference level. Again, that is an economic scenario, not confirmation of an actual market quotation. This distinction is extremely important for Iraqi dinar followers. A forecast, an opinion from a market commentator, and an official exchange rate are three completely different things. The Central Bank of Iraq remains the key institution when it comes to Iraq's monetary policy and official exchange rate framework. Therefore, any major change involving the dinar would need to be evaluated through authoritative announcements, monetary policy decisions, banking regulations, and observable market data. So what would a genuine transition toward greater exchange rate flexibility mean for the Iraqi economy? In the short term, such a change could create significant volatility. Businesses would need to adjust pricing, importers would need to recalculate costs, banks would need to manage foreign exchange positions, and consumers could experience changes in the local prices of imported goods. A currency that moves more freely can respond quickly to market conditions, but that flexibility can also produce uncertainty when the market is adjusting to a new framework. For Iraq, the banking system would be especially important. A modern foreign exchange market requires reliable financial institutions, transparent transactions, effective compliance systems, sufficient liquidity, and confidence among domestic and international participants. If these foundations are strong, a more flexible exchange rate environment can potentially improve price discovery and allow the currency to respond more efficiently to economic conditions. But there is another side to the equation. A stronger exchange rate does not automatically mean that every Iraqi citizen becomes wealthier. Exchange rates affect purchasing power, imports, exports, government finances, business costs, and monetary stability in different ways. If a currency appreciates sharply without corresponding improvements in productivity, investment, fiscal management, and economic output, the result can create challenges rather than simply producing benefits. This is why the broader Iraqi economy matters more than any isolated rate projection. Iraq remains heavily connected to oil revenues, and the country's fiscal position is strongly influenced by global energy prices and production levels. A sustainable monetary environment therefore requires more than a change in the number displayed on a currency exchange screen. It requires fiscal discipline, banking sector modernization, private sector development, investment, trade expansion, and confidence in the country's financial institutions. For dinar followers, the most important takeaway from today's claim is therefore not the 337 figure itself. The more important issue is the concept of a possible transition from a controlled exchange rate framework toward greater market participation. If such a transition were ever officially implemented, the market would need time to establish a new equilibrium. The actual exchange rate would ultimately depend on real economic conditions and real transactions, rather than predictions circulating online. There is also an important difference between a currency being theoretically capable of trading at a certain level and the market actually supporting that level. Foreign exchange prices are determined through transactions. A price cannot become sustainable simply because analysts or commentators expect it to happen. There must be sufficient buyers and sellers, liquidity, institutional participation, and underlying economic conditions supporting the valuation. That point is particularly relevant when discussing the gap between 322 and 3.37. Calling this difference a designed corridor gives the impression that the range has already been engineered by monetary authorities. Unless official documentation confirms such a structure, that wording should be treated as an interpretation rather than an established fact. Looking at the longer-term picture, Iraq has substantial economic potential. The country has significant natural resources, a strategic geographic position, a large domestic market, and opportunities for infrastructure and private sector investment. Continued improvements in the banking sector and greater integration with international financial systems could support stronger economic efficiency over time. However, currency strength must ultimately be supported by economic fundamentals. Higher productivity, diversified exports, stronger institutions, stable fiscal policy, controlled inflation, efficient banking operations, and investor confidence are all factors that can contribute to a healthier currency environment. Without those foundations, a dramatic exchange rate adjustment could be difficult to sustain. This is also why responsible dinar analysis should focus on measurable developments rather than countdowns or guaranteed predictions. If an official exchange rate change were announced, viewers should look for the exact language used by the Central Bank of Iraq, the effective date, the applicable rate, the mechanism through which banks would participate, and whether the change applies to official transactions, commercial banks, or broader market activity. Another key indicator would be actual market behavior. If a major monetary transition occurred, it would eventually become visible through banking transactions, foreign exchange activity, commercial pricing, and financial market data. Those observable developments would provide much stronger evidence than social media posts or unofficial commentary. For now, the 322 and 337 figures should therefore be understood as part of a proposed analytical scenario. They may attract attention because they suggest a structured relationship between a settlement level and a potential market ceiling. But the numbers themselves do not establish that Iraq has approved the new rate or that the dinar is about to enter an unrestricted float. The responsible approach for currency followers is to remain focused on confirmation. Watch for official monetary policy announcements, banking reforms, international financial developments, changes in foreign exchange regulations, and credible market data. These indicators can tell us much more about the direction of the Iraqi dinar than a single projected price target. In the short term, the biggest implication of today's discussion is uncertainty. Market participants should avoid assuming that a projected corridor automatically translates into a guaranteed exchange rate movement. In the long term, the real opportunity for Iraq comes from building a stronger and more diversified economy that can support a stable and credible currency. So, when you hear claims that 322 is the settlement floor and 337 is the open market ceiling, remember the key distinction. This is a reported analytical projection, not an official confirmation of a new Iraqi dinar exchange rate. The possibility of a more flexible currency framework can certainly be analyzed, but the actual outcome will depend on decisions made by Iraqi monetary authorities and the economic conditions that follow those decisions. We will continue watching the Central Bank of Iraq, the banking sector, government economic policy, and international financial developments for information that can genuinely affect the Iraqi dinar. Until official evidence confirms otherwise, viewers should treat specific future exchange rate targets as projections rather than facts. Thank you for watching Iraqi Dinar News. Make sure to subscribe and stay connected for responsible, factual, and balanced updates on the Iraqi dinar and Iraq's economy. Remember, this content is provided for informational and educational purposes only and is not financial advice. Always conduct your own research and consider professional financial guidance before making any financial decision.